The most reliable and efficient indicator for day trading is a little background information beforehand. This indicator was formulated by John Bollinger of Bollinger Capital Management in the 1980s. And since its birth, it's become one of the most widely used technical indicators worldwide. In essence, this is a volatility indicator. Now, what is volatility? Long definition, volatility in stocks is the degree of variation of a trading price series over time, usually measured by the standard deviation of logarithmic returns. Short definition, volatility just means how much a stock moves. High volatility means the stock is moving a lot, and low volatility means the stock is barely moving or is lateral. Now, why is volatility important? Volatility is important because if a stock had zero volatility, you'd make zero profit. High volatility means more price swings and more risk, but also more profit. Low volatility brings in less price swings with less risk, but also less profits. No volatility means no moves or gains at all. This indicator refers to a technical analysis tool focused on security price and volatility to disclose overbought and oversold points or tell you when to buy and when to sell, and what to buy and what to sell. Now, what is the best indicator for day trading and trading in general? Bollinger Bands. In Bollinger Bands, the bands come closer during low volatility and widen during high volatility. Bollinger Bands also allows you to know when a stock has high or low volatility and gives you the ability to predict the moves a stock will do many days prior to its moving. To summarize, when you master Bollinger Bands, you'll be able to know where a stock is moving before it acts and make incredibly profitable trades based on your knowledge of this indicator. Let's see some examples. But before we do, remember to like, subscribe, and comment if you like these informative videos and want to see more. All your support is greatly appreciated. Thank you. Now, continuing, let's start with SPY. First, you have to make sure that in your application of TC2000, your day is in daily and averages 1 hour. We're not going to use it. Bollinger Bands is this. The gray area is what you call Bollinger Bands. Now, how do you use it? For example, in SPY here, it broke upwards. As you can see, it was lateral. It was pretty much lateral. And then, as you can see, it broke upwards. You see this candlestick? It broke upwards. And then it went from $445 to $457. 12-point profit. Simple. Next, SPY did the same thing. When it dropped, it went from $446 to $434. That is a 12-point put. How do you see it? Simply, the price comes. As you can see, the Bollinger Band is pretty much stable, and then it breaks. The moment it breaks, you buy a put. And in that put, it goes from $445 to $433, a 12-point put. The moment it breaks, you buy a put because it'll keep going down for about a week. Same thing happened in call. As you can see, it was pretty stable. Candlestick broke the BB or Bollinger Bands, and then it went from $446 to $458, 12-point call. The moment this candlestick breaks BB or Bollinger Bands, you buy a call, and again, it'll move upwards for about a week. As you can see, it went from $446 to $458, 12 points in call. It started 7/13, took about a week if you discount the days of in between, like Saturdays, Sundays, which don't count. Took about a week, and it took about a week to get 12 points. Another example is Apple. As you can see, Apple had a candlestick break the BB, Bollinger Bands. It went from $187 all the way down to $172. That 14 points is equivalent to about $1,000 depending on your contract, maybe more. Most of the times, way more. It could be up to $5,000 depending on your contract. And it did not just happen here, going from $187 to $172. Apple also did this before upwards. As you can see, it went from $177 all the way up to nearly $200. That is about 20-point call. Another example, AMD. As you can see, AMD went from $87 all the way up to $101. That is about 14 points in call. The moment it broke the BB, Bollinger Bands, you buy a call and you wait with the call. Well, 1 to 3 days. 1 to 3 days, sometimes a week. Usually, you should be able to sell in 100%. That's the best recommendation. Always sell at 100%. If you make more, you make more, but 100% is the target for this strategy. Because as you can see, sometimes it doesn't go 1 to 3 days. It goes less. It goes a day and a half. And boom, then it goes upwards, and your call or put may go bad. So you just reach for that 100%. As you can see, this is easily 100%. It goes from 112 to 108. No, actually 106. That is 100%. Now, as you can see with AMD, it went from $87 to about 101, 14-point call. Then it broke downwards the BB, and it went from $91 all the way to $83. That is about a 7-point put. That is a massive profit. And all you had to do was wait for it to break the BB, and you buy a put the moment you see it goes like this. It goes slanted. The moment you see it go slanted, you buy a put and you make massive amounts of profit. This is easily about 2,000% depending on your contract. But, of course, the target is always 100%. Then, as you can see, it breaks the BB upwards. And this time, it goes on a crazy rally. It goes all the way from $95 to $127, 30-point call. Now, what can you do to maximize your strategy? With some capital, you could buy 3 contracts of AMD. You could sell one at 100%, sell another at 1,000%, and then sell another a week after. Get this 30-point rally all for yourself. This is how you maximize your strategy. Second and most reliable way to use BB is waiting until it gets to the medium line. As you can see, this is what we call the medium line in BB. This is extremely useful. Why is it useful? Well, when it starts decreasing from the top, it usually reaches the medium line, which of course can be 132 to 119, about a 10-point put, extremely profitable. And when it decreases from the medium line downwards, it goes where the BB is at its edge. This would mean from 119 to 109, 10-point put. Incredible profits. Now, when it starts going up from the line, it usually reaches the medium point. And so it goes from 108 to 117, a 9-point call. This is the best way to use BB and the most reliable way to use Bollinger Band. As you can see, it breaks the medium line here, AMD, and since it is going up, you buy a call, and it goes from the medium line, which is at 114, and then it goes all the way to 119. That is a 5-point call. Then it does it again, and it does it repeatedly. You could have made thousands of dollars repeatedly just using the same strategy. Medium line breaks it downwards, you go there, you go to the edge of the BB, and you sell. Then it goes upwards, you go all the way to the medium line, and then you sell. 107 to 112, 5 points. 114 to 107, 106. That is about 7 points. Same strategy. A continuation of this is with SPY. As you can see, it breaks the medium line upwards. You buy a call. It goes from $443 all the way to $454. An 11-point call. It goes from $443 to $454. Incredible. And then it goes from the edge of the BB, it starts going downwards. You buy a put, and then it goes all the way from $454 to $443, $444. That is a 10-point put. Incredible profits can be made using this strategy. And if you like the first way on how to use BB, as you can see, it breaks the BB, makes a dent, and then you buy a put from $446 to $434. That is about 12 points in put. Incredible profits, again, can be made using both strategies on how to use the BB. As you can see, same thing happens with Netflix. Netflix breaks upwards and then goes all the way to $447 from $424 to $447. It goes all the way to the edge. But as you can see, here it also broke upwards and it went from $426 to $439. That is a 10-point call, but it did not reach the edge. Some people would buy and not sell because it didn't reach the edge. But again, you buy 3 contracts. You sell one at 100%, sell it at 1,000%, and leave the other all the way to the edge. Perfect strategy to use. You made 100%, made 1,000%. The other one, of course, could be a loss, but it's covered. And if you bought it for next week, then it wasn't a loss. It went all the way up to $450. Now, same thing happened here. It broke the middle line and went from $439 all the way to $415, a 24-point put, and it went all the way down to the edge. This strategy is absolutely incredible. And then, as you can see, it went from $416 to $439. Absolutely incredible points, incredible profits. You buy the call and you wait until it reaches the middle line. Then, as you can see, it starts to decrease here. And here you might say, okay, I'll buy a put. Well, of course, it went from $434 to $428. That is already 100%. But you might say, okay, I want it to reach the edge. Well, perfect. You just wait. It took about 10 days for it to reach the bottom. It went from $435 to $414, about 20 points in put. Now, of course, if you bought this contract for like 2 weeks, then of course you made your profits. Lastly, we'll use Apple as the final example. And as you can see, Apple uses both strategies of BB Bollinger Bands. First, it breaks the BB and it goes all the way down from 186 to 172, which is about a 14-point put. Absolutely incredible profits. And then, as you can see, it's nearing the edge, but then it starts going up. So you buy a call and it goes all the way from 172 to 180, 8-point call. Then it breaks the middle line and upwards. It goes from 180 to 187. That is a 7-point call. Absolutely incredible. Then it has this downtrend. And then as you can see, you buy a put. It goes from 188 to 181, a 7-point put. But it did not reach the middle line. But it does not matter since you buy 3 contracts always. Maybe 2, 100%, bam, 1,000%, bam, you're set. If you have a lot of capital, you buy 3 contracts and you always wait until it reaches the actual zone. If not, you're already set. Either way, you made 100%, then 1,000%, you're set. As you can see, Apple also does this here. It goes from the edge downwards all the way down to 188. From 193 to 188. Absolutely incredible. 5-point put. Then it starts going upwards from 188 all the way to 196. That is an 8-point call. Does it again, does it again, does it again, does it again. The strategy is absolutely perfect. As you can see, 197 to 192, 5-point put. So you can use both strategies. You can use this strategy where the candlestick breaks the BB and it goes about 1 to 3 days, sometimes a week, in about a downwards trend, always buying 3 contracts, one at 100%, one at 1,000%, then you sell the other one whenever you want, sometimes reaching the edge. Or you can use this strategy. This is way more reliable and a little bit more safe, especially for new traders. You just wait until it reaches the middle line. It's absolutely perfect, absolutely incredible, and it works every time. Thank you for everything and enjoy. Remember to like, subscribe, and absolutely thank you for your support.